Let's kick off part 3 in the video series. This is currently the NQ. I'm on a 55 grid Renko bar. I like between 37 and 60. I found all kinds of different, those time frames, lots of settings that I can match up both for fully automated flip-to-flip trading with the iGrid scalper strategy, but also for this demonstration where I'm talking about just what do you need to go in, get started, start making money in prop trading with just a mechanical based, visually efficient approach to trading, so you can get some traction trading maybe manual discretionary as you're learning the automated stuff. So let's just take a look at the settings. 55 grid Renko. I always have at least 10 days to load when I'm trading automated. If you're just manual discretionary, 3 days, whatever. I won't ever put anything less than 3 days. I always set every chart I ever have in NinjaTrader on default 24/7. I want every single tick of data that ever ticked 24 hours a day, middle of the night, whenever. I want to capture all that data to my indicator for my charts. So this is the NQ December contract. Prior two videos were ES, where everybody says the ES is so hard to trade. Not really, just trade the patterns. NQ, in the settings, I've desensitized, I shouldn't say desensitized. I've kept the responsiveness of the indicator exactly what I had on the ES. All I did was back off the trend bias portion of the indicator because of the tight cyclical action we get in the NQ. So if I go into the scalper indicator, and this is the latest and greatest version, I'm sitting at a 1.9 sensitivity factor. So 19, 19, 1.9, the other things we leave alone, set the colors the way you want, and so on. So, 1.8 to about 2.0 is kind of the sweet spot for this approach. But you can dial it in from there. So anyhow, not sure why my phone is dinging on a Saturday night. So pardon the interruption. So let's look at some price patterns. I like to start trading when I trade fully automated, day after day after day, 7:32 U.S. Central Time or Globex time, Chicago Mercantile Exchange, Globex, all that good old Chicago futures trading history. I start looking for trades after that time period because a lot of times, we might have 7:30 news. I'll wait a few minutes to 7:32, then I'll look for trades. In this case, if I'd seen recent support holding, I might want to get long right away, right out of the first signal after 7:32. And that one ran a bit. I would not entertain being a seller right away because now we're coming into the 8:30 U.S. session open. I don't want to throw on some sell orders in a market that just had a bigger linear move just before the market opened. So we're looking at the NASDAQ for the same day, if I'm not mistaken, that we had the ES. Yeah, it's got to be the same day. So you can kind of see how they look different from each other, but the same type of approach. So now I'm sitting on my hands. If I caught the move there, I'm sitting on my hands and I'm just waiting for something interesting, and I finally do get something interesting. We have the market hold back, lift, and we have a series of descending higher pivot lows. So what do we have? We have a market that is stair-stepping lower, and it's even stair-stepping lower, stair-stepping lower, stair-stepping lower. Then boom, we get a red candlestick, and we get the iGrid indicator, the trend bias, to say no. What looked like maybe some long side action building, we're flipping to the short side. Now I can engage the short side. I now have an established lower pivot high and then a go signal. Price patterns. Leading up to that signal, I have, let's get rid of all that recent drawing so you can see a little bit better. Leading up to that, I have some cyclical M pattern activity leading up to it. So right there, when it happened, we had some M patterns, kind of a series of sequential M patterns leading up to it. The main thing is, hey, I'm going from green to red. I'm going to take a shot at this because we have lower pivot highs. Market has descending pivots. I mean, there's nothing at all here at this point showing me any reason that I shouldn't at least take a shot at the short side. The market's had many of opportunity to trade higher, and it's not. So some might say, well, we have all this support in here. Okay, we'll wait a little bit. Oh, okay, you broke it. Okay, will you get in now? Put your stop and so on. Now in a traditional entry, actually let me use the square box. On a traditional entry, there's my entry. My stop would never be ever higher than my most recent price pivot. Price pivot meaning what's the highest point of price leading up to the leg that got me from long side action to now flipping to the short side action. So the tightest stop I would ever have would be just above the top of the red. See the red and the trend bias? So in other words, if this is my entry price on a market order fill, that would be my stop, just a few ticks above that shift in the trend bias portion of the iGrid indicator. The iGrid indicator is just different. There's no such thing as a perfect indicator. I don't think I'll ever find one, but can you dial it in to help you see visually efficient setups day after day after day? I think so. I think it's very effective at that. Way better than SSL, Super Trend, Chandler exit, parabolic support and resistance, Jurek moving average, this guy's moving average, Dyno this, whatever. They don't have the math that I use in the indicators. They don't program the way we do the indicators, and they don't have two-dimensional smoothing. And two-dimensional smoothing was definitely a breakthrough. That's all incorporated into the iGrid indicator. Okay, so anyhow, a shot to the short side gave you a move, got you down into recent pre-market support just before the opening support. Chewed through that a little bit. Am I going to get short right here as the market's breaking down? Not my cup of tea. I would have already been in for the move here. I could see somebody saying, hey, if we break down and let's say there was some support in this area and we're starting to break through, I want to get in. I could get a nice push down. That's fine. Then get in, take that trade. That to me is not my highest of quality trade. I need suddenly the support to break for my trade to run. So not a terrible, that might be like a B trade, where this to me is about a A minus. Now I'll show you an A plus trade. Big fat structural W pattern and a long. Stop just below most recent price pivot, cycles a bit, and then she runs. That W pattern leading and a big W pattern created over some, standalone recently developed pivots. And right before the entry, you have a W pattern on the microstructure. So not bad at all. Some ways to enter if you're not really into the market order and jumping in right away. Okay, see where the Heikin Ashi, the smooth Heikin Ashi is part of our indicator? Put some sort of limit order down there. Or put the limit order down, and you're not always going to get filled when you do this, but see this transition point where we go from red to green, that top area? Put your order right in there. Sorry if you can't see it. It's kind of, right in there. Put your limit, bing, fills you. Stop right here, cycles a bit, and price starts lifting out of there. If you're scared to buy the market that just recently tested support and you're thinking, well, this might work its way down, Okay, well, when it does start breaking out of the area, then gives you a pullback and gives you a pivot bar, or what we call entry option 1. Or was that an entry option 2? Yeah. Well, it's a pivot bar. It didn't quite interact with the stepped or with our trend bias portion of the indicator, but you have several pivot bars here after the entry I talked about to work into a market that's starting to do that hook, starting to hook. Buyers support, they absorb the selling. Buyers are continuing to absorb. And a lot of times what they're doing is they get off the gas pedal, they stop buying, and the market will naturally settle back from medium and smaller players. Then the larger institutional types will get back in. They'll stop. So they're basically accumulating in a curvature pattern. You know, the V bottoms where the market comes down, stops dead cold and runs, institutionals were waiting at that price level and willing to defend it. This is more, and when they do this, they don't get to put in as much inventory. This type of price action, they get to work in a lot of inventory. V bottoms like that, they don't, that's their opportunity to put in inventory. They can only put in so much inventory. Cyclical price action ascending off of support, they're putting in a lot of inventory. So those sometimes actually get some really nice moves. But you can see it keeps pulling back, lift, pull back, lift. And we keep getting these nice candles. That's an entry option 1, entry option 2, entry option 1. So little areas you could be finding a way to get into price that's lifting. Now, I'm not going to wait an hour and then finally get in. You know, if that was the pattern that wanted me to get in, I need to get in here soon after that pattern. And then it's going to work or it's not. The key is when you get into these trades and they don't work, you're not losing much at all. You could have like 3 losers in a row of a fixed amount of risk per trade and then catch one that gets you all that initial loss back plus a little extra. So you theoretically could be ahead on the day and you got a 25% win to loss ratio. That's why I'm showing you. I'm showing you stuff that you'll never have a lot of risk on, but the rewards, these linear price runs, many a times are getting you 2.5, 3, 3.5, 4 to 1 frequently from trade day to trade day, especially the NASDAQ. The NASDAQ has some big linear movements. And if you keep taking shots based on good fundamental price patterns, you're gonna do really well. And now I like this too. It's a little bit later in the day, not yet midday. It's not like it's lunchtime yet. At least in Chicago, very nice support there. Stair stepped a bit higher, and what do I got? I got a big fat W pattern and lift. Heck yeah, I'm going to get in there and take a shot. That's a screaming buy signal to me. No, I'm not going to simulate what the scream sounds like, but that's a buy. Market came down, couldn't even get all the way down to support. This is just institutionals pulling it back, not all the way down where they would defeat and risk blowing out their initial buying zone. Just down right into it, right above it, and they're buying again, and you're going to get something out of that. And what do I need out of it? Just enough to get me to break even plus, and then it works or it doesn't. And then they come in. Now we're getting a little late in the day, what I'm not really all that excited about trading. We're getting around 11:30, working towards noon U.S. Central Time, but you do have, support, stair step higher, and lift again, and then go green. That's another area you could take a shot. So buy into price that's ascending, buying it that where the market's stair stepping higher. Sell into the markets that are starting to stair step lower. As the market's running and running and running, you don't have to sell into that. Wait till you get a price pattern. If you get the right price pattern, you'll get the movement you need to the short side. So to find out about the special offer on these tools, just send an email to info@gridalgo. If you have any questions, let us know.